So if you've ever looked at a price chart, you've probably drawn lines all over it, right? Support, resistance, trend lines. But what if I told you the real story isn't in those thin little lines? What if it's actually in the thick zones that the smart money leaves behind? It's time to stop guessing and start seeing the hard evidence left by the market's biggest players. Let's dive in.
Okay, so here's what we're going to cover. First, we're going to look beyond simple lines to get a whole new view. Then, we'll talk about following institutional footprints. This is key. We'll define what supply and demand actually are, break down the anatomy of a zone, I'll show you exactly how to draw them, and finally, how to trade right alongside the big players.
All right, first up, let's tackle a big question. Why should we even bother looking for a new way to read the charts? Well, for a whole lot of traders, the classic tools just aren't cutting it anymore.
I mean, does this sound familiar? You draw what you think is a perfect support line, price comes right down to it, gives it a little tap, and then just blows right through it. It's so frustrating, right? And it happens because a single, simple line just doesn't capture what's really going on in the market.
And this brings us to the main idea here. We need to shift our focus. We need to move away from drawing these thin, precise lines, which, let's be honest, are mostly just guesswork, and start identifying thicker, more meaningful zones. These aren't just random boxes. These are zones of evidence that show us exactly where the real battles between buyers and sellers went down.
So are these zones so incredibly important? Well, it's because they show us what the biggest players in the game are doing. This is where we learn to follow the money.
And this, right here, is the absolute truth you have to accept. Individual traders, people like you and me, we don't move markets, not even close. It's the huge institutions, the banks, the hedge funds. They're the ones with the kind of capital that creates those big, powerful price shifts. Our job isn't to try and fight them. It's to get smart and learn how to follow their lead.
And here you can see exactly what we're looking for. A supply and demand zone is basically just a picture of a massive imbalance. See that green area? That's a buying zone where institutional buying just completely overwhelmed all the sellers. And the red area? That's the opposite, a place where selling pressure was just off the charts. These are their footprints.
So, you might be wondering, what's the secret sauce here? Why do these zones actually work? It's all about unfilled orders. See, when an institution wants to place a gigantic order, they can't just dump it all at once without sending the price flying. So they get a partial fill, and the rest of those orders, the unfilled ones, are left waiting at that price level. That's why price so often snaps back to these zones. It's returning to pick up those leftover orders.
Okay, let's get a little more specific and clearly define what we're talking about. Because, they might sound a lot like support and resistance, but there are some really important differences.
This table breaks it down perfectly. The number one difference is freshness. Supply and demand zones are new, freshly formed areas of imbalance. Support and resistance, on the other hand, are based on old price levels that have been tested over and over and over. And that's absolutely crucial, because it means supply and demand can get you into a potential trade much, much earlier.
So now that we know what these zones are and why they're so powerful, let's figure out how to spot them in the wild. The cool thing is, every good zone has a very clear three-part structure.
And it's really this simple. First, you've got the leg in, which is just how price got to that level. Then you have the base. This is that little period of consolidation where institutions are quietly building up their huge positions. And finally, and this is the most important part, you have the leg out. This is an explosive, super fast move away from the base, and it's the big signal that the imbalance is now in control. And the direction of that explosive leg out, well, that tells you everything you need to know. A really strong rally away from a base leaves behind a buying zone, or what we call a demand zone. And you guessed it, a sharp drop away from a base creates a selling zone or a supply zone. The structure is exactly the same, it's just the direction that changes.
All right, theory's great, but let's make this practical. It's time to see how you can actually start finding and drawing these zones directly on your own charts.
But wait, before we start drawing, I have to make a super critical point here. There isn't one perfect way to draw these zones. Some people use the wicks, some only use the candle bodies. The real secret isn't finding the one magic method. The secret is choosing one method and then applying it with absolute, boring consistency every single time. That's how you can properly backtest and actually trust your analysis. So how do you sort the good zones from all the noise? Easy. Just use this simple checklist. Number 1, is the zone fresh? Price shouldn't have come back to it yet. Number 2, was the leg out explosive? We need to see a strong, fast move away. And number 3, is the base tight? A good rule of thumb is fewer than 6 candles. This little checklist will help you filter for only the highest probability setups.
Okay, let's bring it all home. When you start identifying and trading from these zones, you're fundamentally changing how you approach the market. You're no longer just reacting, you're being strategic.
And when you trade this way, the advantages become really clear, really fast. Because the zones are so small and well-defined, they let you make low-risk entries with really tight stop losses. The explosive moves that create them often lead to some amazing high-reward potential. And most importantly, you're trading with institutional order flow, which puts the odds in your favor.
You know, this entire strategy really boils down to one simple but incredibly powerful idea. We're not trying to be fortune tellers. We are simply identifying where the big institutions have already shown us their hand, and we're just planning to trade right along with them. It's that simple.
So, the next time you open up your charts, I want you to try something. Look past all those simple lines. Look for the footprints. Look for the zones where the real decisions and the real money actually changed hands. The story is already there, written on your chart. The only question is, are you ready to finally read it?